What's up, guys? I'm nobody special, and I am just honored today. I have the man, the Robin Hood of Wall Street, Mr. Greg Mannarino, is here with us today. Gregory, how you doing today?
Man, I'm doing fantastic. And let me say this, you certainly are someone special, okay? At least in this guy's book, and a lot of people. So yeah, I'm doing great. Thanks for having me. I really appreciate it.
Thank you for coming on. It's great to have you here. Let's get right into this. I sent you an email about 2 weeks ago, and I said, hey, would you like to come on the channel? I wanted to talk about your hypothetical scenario about a blow off top in debt markets that I've heard you mention a lot on your channel, that you said the big sell off, or the big one that a lot of people have been calling for, was going to be marked by a sudden, almost vertical move in the 10-year yield. And within 7 days of that message between us, the 10-year yield rallied 51 basis points in 7 days, which just blew me away.
It's incredible.
So I wanted to talk about your hypothetical scenario of a blow off in the 10-year yield. And then, of course, I don't know, did it happen? Was that the scenario you were describing, or was that just a precursor?
Oh, that was the beginning. There's no doubt about it. But what happened? I mean, it's unbelievable. The intervention that has taken place via the European Central Bank and now the Federal Reserve to prevent what they're calling a fragmentation in the debt market is unbelievable. I mean, look, they can't say implosion, they can't say meltdown, so they come up with this word, hey, fragmentation sounds really good. Do you know why? Because people aren't going to understand what the hell we're talking about. So they're going to call it a fragmentation. But absolutely, that was the moment where I said, that's it. This is where it was going to happen. And I had speculated that, and I have spoken about this in the past, that central banks, once this would occur, would take action to prevent it. And that action would be massively inflationary. And that's exactly what's going on, because they just can't say, hey, guess what we're going to do? They actually have to get into the market and make it happen. I think this is pretty much common knowledge. So what we're seeing now is, well, don't take Greg Mannarino's word for it or anybody else's. The ECB, this is an emergency policy stance. They've actually accelerated it to, again, prevent that fragmentation. The Federal Reserve is obviously following suit. We've had some extraordinary moves to the downside since that whole thing happened in the 10-year yield. And this is not the average guy and the average girl running out, oh, I got to buy that debt. This is obviously action of central banks. So what they're doing now, it's working, at least for the time being, is they've managed to stabilize the debt market. And I just think all they're doing is they put a Band-Aid on it. They managed to stabilize it for now. I don't think that's a real surprise, but what are they going to do? They were at that inflection point. They were ready to fire at it. Central banks have unlimited amount of firepower. All they got to do is add digits to a screen. It's that simple. So they're utilizing that resource right now and creating all kinds of mechanisms to keep that going. But, there's a price to pay here. It's massively inflationary. We haven't seen anything yet. We're going to get another massive wave of inflation coming here, food, energy especially. They're both linked together here. Real wages are going to continue to crater along with the economy, which is in free fall. And in my opinion, they're exacerbating the underlying problem, which is just this hyper debt bubble. And we haven't seen anything yet with regard to that either. And we're gonna get to that moment of implosion. Again, in my view, and this is not going to be by accident. When they're ready to deflate this, they'll just let it happen. And I don't think they're ready yet.
Now, interestingly enough, the interest rates peaked on June 14th. And June 15th was when the first 1-month treasuries were supposed to roll off the balance sheet, i.e. the beginning of QT. And June 15th was the announcement of the 75 basis point rate hike. So, I have been sitting here scratching my head saying, how are these yields dropping right now when we just started QT and we just had a rate hike and then the yields drop? So it does tend to agree with what you're saying, that the central banks have already started intervening. Where will we see that? Will that show up on the Fed's balance sheet, like on the St. Louis Fed website, or is this happening off the books somehow?
Well, I think people understand this already, but we'll go over it real quick. There is the public balance sheet, and then there's the off-balance sheet work. And what another thing people probably don't realize is every single major corporation on this planet has two balance sheets. They have a public balance sheet and they have what's done off balance sheet. I don't give that much attention. Look, once in a while I refer to the Fed's balance sheet and stuff, but what they're really doing no one will have any idea. There's no oversight. They don't need to put this information out. They can do anything they want at any moment. They're running the entire financial system collectively. These central banks here, they work in concert, and they have been for a very, very long time. So looking at the phenomenon that you just covered, absolutely. This is intervention, direct intervention by central banks here who are determined to continue to inflate via any mechanism possible, whether it's the crisis to crisis to crisis mechanism, which is the new economic model we have, financial economic model, and via, jawboning. Okay, look over here, don't look over here. Don't allow people to really understand what's happening. It's a twisted game. And I have to say, thank goodness for channels like yours, and I would have to give my own a shout out too, to try to clarify what is going on here, because people are being deliberately misled. They're being lied to. It's an environment of lies. I've covered this at length here. I think both of us go out of our way to try to allow people to see it. Okay, the truth is always hidden in plain sight. And, they believe people are not so smart. Me, I take the opposite side of that trade. I think people are smart, but they're just being, again, misdirected and kept off balance, kept confused. All they have to do is be shown what is real. Again, what is the mainstream propaganda ministries? What do they try to do? Very simple. They try to have you focus on a certain amount of material that is very, very misleading. And people sometimes, they lose their ability to think. And that's what they don't want people to think. People that think become a threat to the system. You and me clearly are threats to the system.
Yeah, they want cogs in their happy little machine is what they want. People who do what they're told.
Yeah.
Now, shifting gears a little bit, I've seen on your newsletter recently, which, by the way, you can sign up for Greg's newsletter at traderschoice.net. Fantastic information in that. You had mentioned that you sold all of your crypto. You completely exited the crypto space, which hey, you called that one because we've gone straight down since that newsletter came out. Was there any one particular thing that you saw, any one coin or one app or story that made you think, okay, it's time to get out of crypto? Was it an amalgamation of things, or?
It was a bunch of things here. Look, this is no secret. I have put this out in my newsletter and in my blog. This year has not been good for me at all, not even in the equity market. With regard to my own stock portfolio, this January being its all-time high, since that time, I've taken I finally closed my positions in stocks and took a 36% haircut off the high. And then I started looking at the crypto space and I said, Greg, you lost your mojo a little bit here. So let's just step out of everything for now. The number one rule of investing is capital preservation. So understanding clearly that I have gotten a lot wrong. I have admitted this clearly. I made a series of abysmal calls. I said, hey, you know what, Greg, it's time to just stop, sit back, take in the bigger picture. I've been at this every single day for years, for a very, very long time. And every once in a while, and every investors, traders, career, you run into things like this where you kind of lose your bearings. And the only way to regain that is to step back from the situation and look at it and try to understand what you're doing wrong and learn from those mistakes. So the only reason why I got out of stocks and out of crypto was to regroup, to get my head back on the right way. Now, I fully intend, and I just sent this out in my newsletter a little while ago, just today, as a matter of fact, I will be looking at the crypto space again and back at equities. Right now, I am all in commodities. I got a lot of money to work in commodities. In my opinion, from a guy who's not been right lately, honestly. So, govern yourselves accordingly, everyone. I think the place to be is in commodities moving forward. We'll see how that plays out. But I intend to reallocate funds back into both cryptocurrencies and into individual companies once I get my act together. Now, this may take, I have no idea how much time this is going to take, but I am an open book. Everybody knows that. I intend to share what I do in my newsletter and on my blog. If and when I decide to get back into the stock market, buy a company or two, whatever, I will let everybody know. With regard to cryptocurrency, same thing. I just need to get my act together a little bit, take a step back, and just reevaluate.
Greg, I have to give you credit because there's a lot of guys, say, a particular personality on CNBC who told people to buy Bear Stearns the day before it went bankrupt, that, will sit there and no matter how bad or how wrong they get, they'll just say, I was right all along. See, I told you, even though, the internet never forgets. So to sit there and own the wrong calls, there's a word for that. That's credibility. So I have to give you credit for that. A lot of guys in this space wouldn't do that. All right. And in my mind, that gives you more credibility, not less. Now, you mentioned commodities there. And I'm also very heavily in commodities, mainly energy and food. Is there one part of the commodity space? I have to add precious metals to that too. Is there one part of the commodity space that you're particularly bullish about, some not so much? Is it across the whole board?
I like commodities across the board. I've been explaining, well, going back to my original thesis from day one was people need to be in suppressed assets. And I always had said that gold and especially silver, well, silver remains my favorite asset of all time. I love it. I have it all over my freaking desk everywhere. I just like to look at it, touch it. Sometimes I even like to taste it. I just really do. I tell you.
That's a first for this channel.
But I believe, look, commodities are real things. Okay. So having exposure, in my view, to commodities is a big thing. Now, my theory, okay, has been for a long time that cash doesn't go to money heaven. It doesn't grow little wings and fly away. It just moves from one set of assets into another. And I sincerely believe that if you look at how cash moves through markets, you can track it to a large degree. It's not foolproof, but you can kind of track this stuff. And by trying to think ahead a little bit, okay, what do we believe the most likely scenario is moving forward? I believe sincerely that we have a debt market hyperbubble that's going to get very real. We understand the actions of central banks right now to try to stop a fragmentation. Okay, that fragmentation right now is just getting pushed off. It's going to happen. It's going to happen to a greater degree because the underlying issue remains a hyperbubble in debt, which they continue to fuel. All they're doing is taking a bomb and making that bomb more powerful by adding more debt to it. Okay, how do you fix a debt crisis? By adding more debt to it. Really? Oh, okay. That seems to be their economic model, or at least with the bubble here in debt. Push more cash back into the stock market, keep that bubble inflated, and they want to keep housing prices obviously massively in a bubble there too, in my view. But again, I think when the debt market implodes, all we're going to see is the opposite of what we've been witnessing here. Cash leaving places where it should be going into, and cash going into places where it has no business being, into, like, for example, a hyperbubble in the stock market. The stock market's a hyperbubble in my view. Nothing makes sense anymore. Nothing. It's out of control. And that's another reason why I feel like I maybe have lost my mojo. See, look, I'm an old guy. I'm 56 years old. I've been around a while. I've seen a lot of things, and maybe my head kind of reverts back to in a time when we had a more free market than we have now. We have no resemblance whatsoever of a free market at all. It's a managed market and a managed market economy. So it's very difficult sometimes when you have these kinds of things going on. And that, I think, is part of the reason why I've kind of lost my mojo a little bit. I'm going to get it back. It's just a matter of figuring things out. And I will. It's just a matter of, like I said, sitting back, getting out of the picture for a little bit and reevaluating myself and the situation. But I still believe we're going to see a meltdown in that debt market at one point, and that's going to melt down the stock market, and cash is just going to move. It's going to move into commodities in a big way. And I also believe, again, that it's going to go into cryptos. I believe that. I still maintain the stance that I think the market capitalization of cryptos is going to get a lot larger when this movement happens. Could I be wrong on that? Absolutely, I could be wrong on this. This is just what I think is the most likely thing to happen in a meltdown with regard to the debt market, understanding that cash is just going to move from one set of assets into another. I always tell people, do you want to research? Just because I think something doesn't mean it's necessarily right. I just try to explain to people why, at least I feel that, and people are absolutely entitled to have their own opinion on it. And the crypto space it's a very tough spot to be in. Extreme volatility. As a matter of fact, if you go back to the videos that I had done at the end of last year, talking about 2022, I had a couple of big themes. Inflation was going to surge higher. we were going to see a very volatile stock market and extreme volatility in cryptos. I think I nailed it. Okay. Did I know at that point that I was going to end up, in the situation I am now, making a series of bad calls? Of course not. But, we're going to fix this. At least I think so. I hope so.
Yeah, I'm kind of in the same camp as you with crypto. I still have positions in Bitcoin, Ethereum. I don't touch altcoins or decentralized finance. But I think the bad news in the short term is probably not over in the crypto space. But my long-term horizon for Bitcoin remains unchanged. It's not a very popular opinion right now, but I stand by it. I think at the end of this decade, I think the Bitcoin bulls will come out ahead in this one. Now,
A lot of
real
people
quick,
feel that way. And I can tell you personally that I have some very smart people that I maintain close contact with who have numbers on Bitcoin that almost seem supernatural. Will it get to that point? I mean, I'll just throw a number out here. One of my friends who was an early investor, way earlier than me on Bitcoin, I almost feel crazy saying this number. Again, people, this is not Greg Mannarino. I'm just relaying information. One of my good friends, early investor on Bitcoin, thinks it's going to hit $250,000. That's his high point target. Is it going to get there? I can't tell you. I have no freaking idea. But that's just one. That's the biggest target that I've heard with people that I personally know. $250,000 is a big fat number. Is it possible that when we get a debt market implosion, that we see that kind of movement, let's say into Bitcoin? Who am I to say no? I don't know. I have no idea. And people are, of course, entitled to their own opinion. That's all I'm saying.
well, you know me now, and my number has been 1 million by the end of this decade. So you got a new
Wow.
record, Greg. That's
Wow. I did not know that was your number. Look, I can't look, people are going to argue about that, but people need, when people look at the crypto space, I want them to understand what they are looking at. We're looking at a relatively new asset class. Okay. And because of that, I think, wild speculation in any direction is warranted, and people are allowed to sit back and say, this is what I think. There are people that believe it's going to zero, and they're entitled to that opinion too. Me, I'm still of the opinion that at the moment of when it does happen, that market implosion is going to lead to a market cap ballooning. I mean, 2, 3, 4 times wouldn't surprise me with regard to the price of Bitcoin. And you can just do a little math from its current position and figure out where I think that target would be. And I intend to get back in once I get my act together. I don't have it together yet. I fully admit that. I will work on it.
all right. Last one, because I know you're pressed for time and we're butting up against the clock here. The general consensus in financial YouTube seems to be that the Federal Reserve is going to have to make a choice between the economy, i.e. the debt market, and the dollar, that they can't save both. We're either going the route of deflationary crash or hyperinflation to save the debt bubble. Where are you in that dichotomy there, or is that just the wrong question to be asking entirely?
No, I don't think it's the wrong question. I don't know. No questions are ever wrong. The only questions that are wrong are the ones that are never asked, in my view. But how I see this playing out is pretty simple. It really, and I can't, look, I could be wrong on this too, but I eventually do see that meltdown here in the debt market. I see yield spiking in an uncontrolled fashion here. I see everyone moving to the door at the same time, and that cash moving into commodities, which could possibly and present a hyperinflationary environment. And then that obviously could quickly reverse. I don't think there's any particular pattern that this may follow. We just need to try at least to understand where we believe cash is going to move. Look at the dollar, for example, the relative strength of the dollar. I told people many months ago that I believe that we're going to see the relative strength of the dollar, or comparative strength to other currencies, go much higher. And that's exactly what has happened. I also believe we're going to see the numbers that we're at now. I think there's a lot more room to the upside and how that's going to play out. But again, we are seeing with our own eyeballs the absolute strength of the dollar, or its purchasing power, just go up in smoke here. And it's very difficult to to stop that from occurring, because we've been in an environment now since the last meltdown where central banks, including the Fed, have been on a money creation binge. And this environment that we are in now of surging inflation is all of these extra bills now just coming back to chase the same amount of goods. And it's, it's economics 101. Once that starts, and it started already a while back, it's exceedingly difficult to prevent from getting worse. With the Fed now that is engaging along with other central banks in continuing to inflate via any mechanism, I mean, they're exacerbating the problem. In my opinion, they want to destroy the current financial system. They want to wipe it out, and they're going to replace it with something different, something with a lot more control. It's all about control, in my view. And unfortunately, I think it's in our face. We can see the writing on the wall, and none of it's by accident. Everything we're seeing now is deliberate. For example, the intervention by central banks right at the moment when that 10-year yield was spiking like that. Does anyone actually believe this was by accident, that it happened simultaneously? How about no? I don't think there's a single person here that believes that.
All right. Well, Greg, I want to thank you so much for taking the time. I know you're a busy guy to talk to us today. Any parting words?
No, people, pay attention. That's all. Pay attention to this guy that's interviewing me right now. And I hope you would come over to my blog as well. Between the two of us, we're trying to make a difference, and you're all part of it. That's the truth.
And where can we see more of your work? But we know you have the YouTube channel. I'll put a link down in the description. Where else can they find you?
Traderschoice.net, my website.
All right. Well, folks, until next time, live small and dream big.